Stocks swing up after an early dip with financials riding the sharp dip in consumer inflation. Realty and metals also notch up some gains while energy and IT stocks are the big drags. The Asian Paints stock price gets a strong coat of green as the market leader notches up second quarter volume growth more than twice that of the estimates. Even as smaller peers lag, most analysts give the stock an upgrade. Even as lenders vote on the resolution plan for Jaiprakash Associates by suitors including Vedanta and Adani, Manoj Gaur, the MD of JP Infratech, has been arrested by the Enforcement Directorate for cheating home buyers. The Economic Offences Wing says it has so far found no criminal conduct by former executives of IndusInd Bank. Given this, no FIR is likely to be filed in the matter. The revelation lifts a cloud on the bank's governance standards. And Mahindra bets big on the insurance space, initially via a JV with Manulife for life insurance and with an intent to enter general insurance once composite licenses get the nod. CEO Anish Shah sees the life insurer breaking even in 10 years with a valuation of up to 30,000 crore rupees. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Hormuz Patakia. It's the fourth straight day of gains for the markets, counting down to the weekly expiry of the Sensex contracts. Every little intraday dip that we are seeing is getting bought into very, very swiftly. The Nifty now nearing the mark of 26,000. And the index has risen almost 500 points now in the last four trading sessions so far. And a couple of stocks that we are watching out for. Of course, mind you, the Nifty Bank has hit a record high just before we move on to stocks, crossing the previous levels of 58,577, and it's a slight, ever so slightly come off those levels, but still holding on to gains of around 300 points. The mid-cap index too hitting a record high in today's trade. It hit a record high in yesterday's trade as well. So that too has slightly come off the highs of the day, but still a 0.25% higher for the mid-cap index, trading above the mark of 61,000. And watching out for some major earnings today. Of course, it's the last leg of the earnings season this quarter. PG Electroplast is one stock that the street will be watching out for, especially after the drubbing that the stock had taken after the first quarter results and the subsequent guidance cuts. 7% higher now on the stock for PG Electroplast ahead of the results announcement. Also reporting results today, Hero MotoCorp, Eicher Motors, Samvardhana Motherson, all of them, the auto and auto ancillary names. Hero MotoCorp doing precious little as of now, off the highs of the day. Eicher Motors too off the highs, and Samvardhana Motherson in the red ahead of the results announcement. But the other major trigger last evening, aside of the results, was the fact that India's October consumer inflation, or CPI, has come in at a record low of 0.25%. That was in line with the CNBC TV18 poll. The drag came largely from food prices, but would this mean a rate cut from the RBI in the next policy on the 5th of December? Lata has more on this.
Well, we need to understand the depth of the inflation fall. It's not just 0.25% is definitely the lowest in the new CPI series, which started in 2013. But even historically, if you go back any number of decades, 0.25 would figure as among the lowest we have seen. And food inflation minus 5% versus our poll of minus 4.1%. This makes it the fifth consecutive month that food prices are lower year on year, in the sense, deflation. We are not looking at a slower pace of growth. We're looking at aggregate prices being lower than last year. It's actually a high base. Remember, tomatoes at 100 rupees last October, even potatoes and onions, very expensive. So this is very much a base effect. But nevertheless, the RBI has to go by these numbers. And look at these: cereals, pulses, milk, veggies, fruit. Very big weight in the food basket. All of them were down in October compared to even September. And this, despite it being a Diwali month. Normally, you would, prices start falling only in November. But this year, it's fallen even in a very high consumption month. And then now, let us look at it from the Reserve Bank's point of view. The Reserve Bank's mandate is 4% plus or minus 2% mandate. Now, CPI is under 4% since February of this, which means 11 months of this year, it's under 4%. And it's likely to remain that way even in the first 4 months of next year, according to economists. Then let's look at the 2% number. According to the Reserve Bank's mandate, you can't go below 2%, right? It is 2 to 6%, which is what 4% plus or minus 2% would mean. Now, it's below 2% since August, And that makes it about 4 months, 1 month where it is 2.01. But otherwise, from July, we are getting a lower than 2% inflation number, which will go on probably till December. So what is the Reserve Bank faced with? Inflation numbers clearly pointing to a rate cut. But between now and December 5th, you'll get the GDP data for second quarter, which is expected to be above 7%. And there are quite a few who believe it will be above 7.5%. That's because the deflator is very low. WPI is a negative. So what will Reserve Bank do? Will it say that I have space to cut, so I cut? Or will it say there is no need to cut because 7.5, and in fact, first half average would be 7.6 in that case, is a damn good number. Why should you waste the firepower now? We don't know. Chances are the majority in the street is veering towards a rate cut. So today, perhaps there will be a sentimental negative for bank stocks and a sentimental positive for all those, durables, real estate, NBFC, the users of bank money.
Lata, thank you for that update. Now, IndusInd Bank is another stock on our radar because the Mumbai Economic Offences Wing has said that there is no evidence of criminal conduct against its former executive. Santya is joining in with more on this. Santya.
Mumbai Police's Economic Offence Wing, which has been investigating the allegations of a 1950 crore rupees discrepancy in the IndusInd Bank's derivatives portfolio, has now said that the investigation so far reveals that there is no evidence about any siphoning of funds or any criminal conduct by the top former executives of the bank. EOW had summoned top former executives of the IndusInd Bank, including Sumant Katpalia, Arun Khurana and Gobind Jain. Last month, CNBC TV18 reported that this entry of 1950 crore rupees, EOW has established that there is no criminality here, there is no criminal angle here and no siphoning of funds. EOW started looking into another entry of 258 crore rupees, and now EOW sources tell CNBC TV18 that they have found that this entry is also absolutely clean. EOW sources tell CNBC TV18 that they have written to the RBI now and have sought clarification on certain angles, certain points, and once they get a reply from the RBI, they are going to conclude the PE, and at present, there is no further inquiry being conducted by the EOW in this matter. Sources tell CNBC TV18 that Mumbai Police EOW has not found any evidence and there is no base to file an FIR in the matter, and PE is to be concluded soon.
Santya, thank you for that update. IndusInd Bank at one point was up 2%. It's a slight cool off from the highs of the day. But the other one in focus is Biocon, and that has risen after its management told CNBC TV18 that Biocon Biologics will merge with Biocon, which could potentially unlock value. Listen to what the management had to say on this.
The board has constituted a special committee to look at various options. And one of the options which we had mentioned is a merger between Biocon and Biocon Biologics. And I think we right now focuses, of course, on strengthening the balance sheet by giving exit to all the structured equity or structured debt players. So we have already given an exit to Goldman Sachs and Kotak, and we announced that we have also entered into an agreement with Edelweiss to buy over the CCD and give an exit to Edelweiss very soon. So I think that portion of structured debt has been addressed. And I think as far as the bank debt and the bond is concerned, I think we still are very well placed. We have the debt repayment starting next year in a bullet form, and the bond, which is the large part of 1.2 billion, comes up for repayment in 2029. So I think as of now, the focus, of course, was on cleanup of the balance sheet, to look at corporate options, and then focus on generating cash flows to take care of the bank debt. We are hoping by end of this calendar year or before the calendar year.
Now, the other one, big announcement that came in this morning was from Mahindra and Mahindra, and that's because they announced a new joint venture in the field of life insurance by partnering with Manulife, a Canadian insurance company. Anish Shah, the group CEO and managing director, said that they see tremendous opportunity in the life insurance space. Listen in.
We feel that we've got a very strong proposition here. With Mahindra Finance distribution, with the customer base we have, not just in Mahindra Finance, but also across the Mahindra group, we feel we can build a much stronger business. The way we've started it, it's also a lot more capital efficient and one that will return much greater returns for our shareholders. Life insurance is underpenetrated today, and we see a tremendous opportunity here, and which is why we've started with life. If the insurance regulations allow a composite license, that could be a potential upside for the JV. And that's something we will evaluate when that happens. And yes, general is attractive as well. But but given the opportunity we see that's very meaningful today, we've started with life.
Now, in a rare and exclusive interview with CNBC TV18 earlier in the day, the country head of UBS, Mickey Doshi, seems bullish on India and particularly the financial services segment. He added that the diversified businesses are coming to the stock market. Listen in.
First thing is, I think clearly the financial sector is a proxy to our large population, right? 1.4 billion people, 1.5 billion people. The consumer play in India, if you play it via financials, there's a great way to play it. India has had some world-class banks. Yes, you're right. Historically, the RBI was quite stringent on allowing foreigners to come in. If they came in, licenses were given, with a certain business plan. Growth was controlled by them. And I think there was no harm in the way we approached it. I think we've had some, ICICIs of the world, HDFCs, Kotaks, would not have happened that easily if you just allow them to come in the manner they may have wanted to. I think going forward, yes, it's a mature market. I think there's need for a synergy between what the global banks can bring to India in terms of products, in terms of the reach, etc. Most of the IPOs clearly at the right valuation have done well, and I continue seeing that. I think we've seen the other advantages. It's no longer just a single economy, or it's across sectors. You're seeing the IPOs coming out. I mean, I was just looking at this morning's papers. From defense to education to consumer, you can buy glasses, etc. So I think it's a very varied sector. India is no longer just a 2-3 sector market, and I think it's going to continue.
Take a short break, but here's a note for you viewers at CNBC TV18 Access. We promise you the power of insight, staying true to that promise. A couple of weeks back on the 27th of October, we told you that Mama Earth's parent Honasa Consumer could be poised for a turnaround with the change in management strategy. Today, investor confidence in the stock has surged after the company reported a stellar second quarter, but you would have missed out on the access privilege if you are not yet a member. To receive such insights on a regular basis, become a member of CNBC TV18 Access now. Welcome back. Let's bring you all the action from the election front in Bihar. Most exit polls have given the NDA the edge. Access My India's exit poll predicts the NDA win with a narrow margin. Sudarshan is now joining in with more details on this. Sudarshan.
So in the last 48 hours or so, since the time voting ended on Tuesday, we would have seen that numerous agencies coming out with exit polls, and some of the names we have heard for the very first time. One thing is common is that most of these agencies have given NDA or say ruling alliance an edge. Now, today's Chanakya has given as high as 160, and most of the agencies have given as low as 133. But one contrasting factor is Access My India has come out with its poll yesterday. It's one of the most tracked agencies. Now it's giving an edge to NDA, but margin is narrow. So the range it has given to NDA is 121 to 141, and for Mahagathbandhan or say RJD-led alliance, for them it has given 98 to 118. So midpoint for NDA as per Access My India is around 130, and midpoint for Mahagathbandhan is around 110. But now we'll have to see what happens tomorrow. The real picture comes out tomorrow. One thing will be clear by this time tomorrow. We'll have to see if the 20-year Banwas of RJD gets over or Nitish Kumar gets another term.
All eyes will be on Bihar all through the day tomorrow. Sudarshan, thank you for that update. Let's also now get you some views on the relations between India and the United States. Shireen Bahan spoke to the US ISPF Chairman John Chambers and President and CEO Mukesh Aghi to understand how companies and CEOs were reading the relationship between the two nations. Listen to what they had to say.
You now see our constituency, and we have 450 members at U.S.-India Strategic Partnership Forum. When Mukesh polls the group, they're all in and they're all investing in the future. So they see this as a short-term bump. They don't view it as a way that's going to disrupt our long-term relationships, and I absolutely agree with that. So I am very optimistic on what we're going to see between the U.S. and India, and more importantly, I'm very optimistic India will become the #1 GDP country in the world, which nobody would have dreamed of 4 or 5 years ago.
A deal does not define the relationship between the two countries. The relationship is much deeper, broader. It's on technology partnership, it's on defense partnership. In fact, US just signed a 10-year defense pact itself. It's on students, it's people to people. We have around 5 million Indian Americans driving the relationship. So I think we should not just stay focused on the deal, if it's happening, not happening. Yes, it does have impact on 50% tariff on a lot of India's export. But what we are finding is those businesses are finding ways to find a solution to the exports itself. They're diversifying. But overall, just to follow up on John's comments, I have talked to around 70 plus CEOs last 90 days. Not a single one has said they will move their investment out of India, or they will reduce their supply chain out of India, or they will basically slow down on GCC. Everyone is very bullish on India.
Take a short break. More news and updates on the other side. Stay tuned. Welcome back. Now, after 43 days of disruptions and delays, US President Donald Trump signed the legislation to reopen the government. Take a look at this report.
US President Donald Trump signed a funding package to reopen the federal government on Wednesday, ending the longest shutdown in US history.
The federal government will now resume normal operations, and my administration and our partners in Congress will continue our work to lower the cost of living, restore public safety, grow our economy, and make America affordable again for all Americans again.
The bill is passed. The motion is adopted.
The deal cleared Congress earlier in the day after the House of Representatives passed it with a vote of 222 to 209. That was despite strong opposition from House Democrats, who are angry that a long standoff launched by their Senate colleagues failed to secure a deal to extend federal health insurance subsidies. House Minority Leader Hakeem Jeffries spoke prior to the vote.
House Democrats will continue to fight to address the health care crisis that Republicans have created. And House Democrats will continue to fight to extend the Affordable Care Act tax credits for tens of millions of Americans. This fight is not over. We're just getting started.
While the deal sets up a December vote on those subsidies in the Senate, no such promise was made in the House. Speaking before the vote, Republican House Speaker Mike Johnson blamed Democrats for the shutdown.
And then they admitted, many of them, and we could name them here, but I'm not going to take the time, they admitted that they were using the American people as leverage in this political game. They knew that it would cause pain, and they did it anyway. The whole exercise was pointless. It was wrong, and it was cruel.
The measure reopens the government after a 43-day shutdown. It will restart disrupted food assistance, pay hundreds of thousands of federal workers, and revive a hobbled air traffic control system. It would extend funding through January 30, leaving the federal government on a path to keep adding about $1.8 trillion a year to its $38 trillion in debt.
Take a leave on this edition of Business Lunch. Numbers have started coming in. We'll be watching out for some big numbers as well through the course of the day. From me and the team, thank you for watching Midcap Radar on the other side.